Good afternoon, everyone, and welcome to round 2 of our PPP webinar series. Thank you so much for joining us today. Our speaker this afternoon is Bryon Garrety, CPA with Garrety Associates. And I would love to take this time to thank our official sponsors, SBDC, SBA, St. Tammany Corporation, the Greater Hammond Chamber of Commerce, Livingston Economic Development Council, LED, and Southeastern. So as we go through our webinar today, if at any point you have a question that you would like to ask, please type that question in the chat box at the bottom of your screen, and we will take some time at the end to answer some of those questions. So the earlier you get them in, the more likely they are to be answered. So I will now turn it over to Mr. Bryon Garrety.
Thank you, Sandy, and thank all of you for participating today. We're going to go through the sequel or prequel, I'll explain the difference of round 2 of PPP. You know, if we remember back in March, Congress started to work on the CARES Act, and that's where the first round of PPP was contained. It ran out of money. They voted for more money to increase the funding for it. Another round of PPP, that was phase 1, was issued. Millions of small businesses applied. Over $76 million was distributed in the state of Louisiana. Lots of money went out. Then that program ended in August, and it's been very quiet since then. Had to get through the election and those type of things. Right at the end of the year, Congress decided to take up some actions. They got a bill passed. The president signed it into action. And then when we came back from basically the holiday break, we started to receive some of the guidance on it. And that's what we're going to go through today. Who qualifies, what you need to do to qualify, how you're excluded, and all the things that go with it. And then some of the other changes that were put into that last little bit of legislation. And there are quite a few of them. I sum it up with these pictures. You know, the 2 rounds of PPP that we'll talk about, they're similar, but they are different. The other thing is in round 2, they added some clarity to it. They increased the magnification or brought into focus some of what they intended in the first round. And so even in this second piece of legislation, it refers back to, and in some cases even affects, some of the round 1 legislation. Okay. Cannot stress enough. In round 1, it was stressed. In round 2, it continues to be a very, very high stressed issue, is to make sure you document. We recommend that you document not only all of the transactions regarding the funds and the use of your PPP, in case you're called to say, hey, what did you spend this money on? Because as we should remember from round 1, there are a narrow number of expenses that we can spend it on. They did increase those the categories of expenses a little bit for round 2, but documentation is still necessary. And probably most of all, and the overlying thing, is document your reasons for applying for the PPP loan. It must help you justify and support your certification. And you can use a letter. I have a draft letter that was provided by a banker for one of my clients. I'm going to share that with you. And you should have similar things as to that draft letter in your documentation. The best time to do that documentation as to why you're applying is right now as you're applying. If you didn't do it in round 1, you need to stop and think about round 1 and why did I apply for round 1? And now you're getting ready to go apply for round 2. Take the time, jot it down in a notebook, send it to yourself in an email, get it out of your memory and onto paper, because if you're asked about it over the documentation period, which can go up to 7 years, you may not remember all of the little details. So please take the time to document. And remember, in gathering this documentation, putting together these letters, talking to your CPA, critically important, and talking with your banker is critically important. I've told all of my clients it's a great time to try to take your banker and your CPA to lunch, so you can get them to stop what they're doing for a few minutes and listen to you and help you out. Okay, The reason I bring this up is that these words, the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. This is one of those attestation clauses that every applicant has to sign off on. It was in the first round and it's in the second round. If it weren't critically necessary, they wouldn't have put it in the second round. They lacked some of the other rules, but this one they continue to stress, and maybe even stressing more. So that's why I want everybody to be prepared for it. So looking at this on the form 2483, this is one of those certifications that you have to initial and sign off on. And I want you to be prepared for that and have your documentation ready. Okay. The next slide. This is from one of the frequently asked questions. This was question number 46. This is on the Treasury website. Okay. So knowing these things and the way they all work together is very important. This one gives some indication that, hey, there can be some lighter treatment. You know, any borrower that together with all of its affiliates receive PPP loans with an original principal amount of less than $2 million will be deemed to have made the required certifications concerning the necessity of the loan request in good faith. Okay, some people look at that and say, hey, this is just a carte blanche. If I'm under $2 million, they're never going to ask me to certify the reason for the loan. That I don't think was congressional intent. That certainly isn't the SBA's. It's not automatic. I still think you need to take the time, document your reasons that you're applying for, establish that timeline, you know, kind of journal out what was going on in the business and record these things kind of in memorandum so that if you're ever asked, you can do it. Now, we all know that people over $2 million, that's an automatic audit. The SBA is going to sit down with them and bring out the microscope and go through their documentation. Under $2 million, they can still audit. How they'll select it, they haven't told us yet, but I want everybody to be prepared so that you don't hit a problem. Okay. In the new legislation, just as in the old legislation, they didn't define necessity. If we have to look for a definition of necessity, we go to a U.S. Supreme Court, Welsh versus Hellenberg. And necessary equals the appropriate and helpful. Was it appropriate and helpful to the business? That's what you're looking to document. So take the time, put that together, track the use of funds, segregate it from the normal operating funds, and then draft the letter with the bank or supplier. Some very simple steps, not a huge commitment of time, and getting those opinions from the banker and the CPA just kind of makes your case rock solid. Okay. Some more FAQs. Again, these are on the Treasury website. I'm sure they'll be adding to them. In the first round of PPP, they were adding to them every day and every night, it seemed. So these will continue to get added as they define certain terms, refine what they mean, and try to provide additional guidance to the people who are participating in the loans. And the guidance is written for both the lenders, the banks that are participating, and for the borrowers, the small businesses that need the money. Okay. And this comes into that idea of necessity. You know, so the question was asked, do businesses with adequate sources of liquidity to support the business ongoing operations qualify for PPP? Okay. And the answer, although the CARES Act suspends the ordinary requirements that borrowers must be unable to obtain credit elsewhere, borrowers still must certify in good faith that their PPP loan request is necessary. So, you know, they have this ball, the necessary ball going back and forth. Whose favor is it in? Right now, I think it's just a tie. So do your part, document what needs to be documented, get your letters done, and move on. That way you don't have to worry about it. And even if you're asked to provide documentation 3 years from now, you'll go back to that file and you'll pull it out and go, this is what was going on. Regardless of what ended up happening, this is what was going on at the time I made the application. So again, just take the time to make sure that you're covering those things that you're signing off on. That's really the only way that you can get in trouble, you know, with a valid loan, is to not have this all documented. Okay. To receive the round 2 PPP loan, the borrower must satisfy the necessary test. So the SBA is asking, the bank is asking, I ask my clients whether or not the business will survive without the loan. Okay. If the answer is no, we won't survive, then the necessity is absolutely there. It's not always that black and white. You know, sometimes there's areas of gray. That's where we need more of that documentation to come in. I've already mentioned creating that timeline. that little journal of all the things that have happened, could happen, could possibly go well, or even go wrong. Okay. How will we weather the storm? Okay. I think the determination of whether or not you qualify is best made with the help of counsel, legal counsel, an accountant, a banker, financial counselor. If everybody agrees, then I think it's very, very rock solid. You have documented why you applied for loan. And one of the things I must say is that when we get to sole proprietorships, especially those without employees, if that sole proprietorship has any type of net worth, equity in the house, ability to borrow, money in the bank, it is harder for them to qualify for PPP than it would be for a corporation in a similar instance. Okay. All right. And I already mentioned the necessity test was never fully defined. So these are things we've pulled out of the guidance and said, hey, this is best practices. But the SBA did not come out and meet a rule and a test and said, check these 5 boxes. If you did it, you meet the necessity test. So documenting everything you can, I think, is again, the prudent move. Okay. Sample letter. We will send this letter to you. You're going to get a copy of the slides and the presentation that we're doing today. You're going to get this and a worksheet that we use as a pre-qualifying worksheet for people making round 2 applications. But this letter, if you look at it, I changed the names of the innocent, but to Mr. Jones, we here at Best Bank are always interested in supporting our customers in great times and in less than great times. I appreciate you taking the time to go over your financial position with me and found the discussion with you over market concerns and the impact of the COVID-19 virus on your business telling. Okay, beautiful start. The banker then says, I've reviewed your financial statements for 2019 and 2020. Okay, stop for a second. We've got to make we've got to be able to provide some documentation to the bank and to the SBA for round 2. You're going to need your financial statements from both 2019 and 2020. If you haven't filed a tax return for 2019, you're behind the ball. You're going to have to get some things together because the bank's probably going to require them to get you down the approval line. And in certain circumstances, you're going to have to show them a 2020 tax return too. I know we're early in the season right now. We're not even through January, but I've got a few people who are having to rush their returns along so that they can make their PPP applications. Even with that, your financial statements, your accounting should be done for 2019. It's old now, and 2020, we're in January. We should be closing the books. But we go on with the bank. Okay, along with banking details, including your average daily balance and the volume of timing of deposits you keep in this institution, your financial statements and comparing the 2 years show some growth. This company actually did okay during COVID, okay, comparing the year to year. 2020 has a slightly higher profit than 2019, okay? So it sounds like this company could be doing better. After discussions with you and more detailed review, the change in profitability is a result of cost-cutting measures you and your management team have taken in response to the virus. Yes, they got slightly more profitable but that's because they went in and gutted expenses. Gross revenue for your business was flat on the year-to-year comparison. Your business through 2020 is still healthy. However, the service nature of your business and your customer base has had a dramatic impact from the COVID-19 pandemic. My concern is not with the 2019 or 2020, but rather with the first 6 months of 2021. In your business and in other similar businesses, I have seen average daily balances and deposit volumes decline in December 2020 and January 21. Analyst at the bank predicts continued decline in your market through the mid part of 2021. It appears the more severe part of the storm may still lay ahead for your business. Boom, the banker nailed it. What was the uncertainty? What was the necessity? And why are you applying for this PPP loan right now? It's because the bank and their analyst, in talking with you, have determined that the roughest part of the storm for you is still coming. It's not over. You're still in the dark part of the tunnel. And the light hasn't come up yet. So this was a beautiful letter put together by a banker, and it is on the top of the file for this client. And all of you should have a similar letter. Okay. So we talked about this law change. It was called the Consolidated Appropriations Act of 2021. Okay. It took better than 6 months for Congress to kind of get together and come back and vote on additional support and legislation in response to the pandemic. But at the end of the year, they finally did. On December 21st, it was passed by the House and the Senate. On December 27th, it was signed into law by the president. It passed with overwhelming majorities in both the House and the Senate. Big points of the bill: $284 billion for PPP Round 2. $2.3 trillion in spending again, $892 billion COVID relief, funds for things within the United States, funds for things without the United States. Not getting into those arguments. One of the things I want you to note, though, not in this legislation, there was still $130 billion still available for PPP Round 1, the one that closed in August. Basically still sitting in the bank account, has never been sent out. Nobody made application for it. If you do need to want to see the law, the 5,000-page bill, you can go to some of the congressional websites, but you'd be looking for the revision of the act that was as of January 19th, should be 2020. That was essentially the one that went in for final final approval. So if you go to the congressional websites, you can get the actual law itself. Okay. Other provisions within the law. Okay, economic impact payments, EIP, $600 per person for those who qualify. Those started to go out the first week of January, and people who qualified are going to get them throughout January. So if you haven't received it yet, it may still be coming. It is based upon you having filed and completed your 2019 tax return. So due to the hurricanes or anything like that, if you were still outstanding, you may not receive it until after you file that 2019 return. It also extended federal unemployment benefits. If you remember back during the summer, it was $600 per week. They cut it down to $300 per week per person. And they extended it from 39 weeks to 55 weeks. So people will qualify for an additional period of time. A lot of tax provision changes in this, and some of them impact some of the businesses that we deal with on a daily basis. It allowed an across the board deduction for up to $300, $600 if you're married filing jointly for charitable contributions. You don't have to itemize to get that. It's now just a single line item on the return. And now this is the big one: 100% deduction for meals bought at a restaurant, takeout or delivery for all of 21 and all of 22. Okay. So typically meals and entertainment were limited to 50%. They considered that, hey, if you went out to lunch with a client, half the meal was for you or half the ticket price was for you, and that was for a personal expense. The other half was for the client. So you were only allowed to deduct half. Now you're going to get all of it. That's a big change. Okay. It also overturned an IRS notice that came out in the middle of the PPP program, IRS notice 2020-32. That notice said, hey, although this loan will be forgiven and turned into a grant, you're not going to be able to deduct the expenses that you pay with it, which basically has the same effect as making the grant taxable. It increases the bottom line of the business. Congress had to go through it long and hard, but in the end, they decided that wasn't their intent. So on round 1 PPP, they said, no, none of it will be taxable. On round 2, none of it will be taxable, even if 100% of it's forgiven, because that was our intent. So that was a very, very important late year piece of legislation. Okay. It allowed the deductibility of the expenses. It addressed some of the issues as to how bases are calculated when the loan is forgiven in both a partnership and an S corporation. Didn't really address the at-risk rules, but yeah, that might be something that comes out in some of that additional guidance or FAQs over the next couple of weeks. Okay. To be eligible for round 2 PPP. Okay. Really, let's start off with the fact that really to get to round 2 PPP, you have to have gone through round 1 PPP. So if you had a PPP loan, you've crossed the first threshold. The next one is the loan must be necessary to you. If your business has doubled or tripled in size and you're looking for and your profitability is up and you're looking for round 2 PPP, you probably shouldn't apply. You don't meet the necessity test. In round 1, it was companies that had 500 or fewer employees. In round 2, you're limited to 300. So it's going to be 300 and below. So they're targeting smaller businesses. One of the agreements are you had your round 1 money and you used it. You used the money, or you're getting ready to use it all up. It is all going to be spent in the proper way, in the proper categories, 60% to 60% or more to payroll, and the remaining 40% within the narrow column of expenses that they allowed. And then the big qualifier, you can prove a drop of 25% or more in gross receipts between the same quarters in 2019 and 2020. So business has to go down. Your financial statements are going to have to show that business went down. Your tax return will have to show that the business went down. And your bank deposits, in some cases, will have to show that the business went down. It depends on which bank you're applying for and the items they want you to provide. Okay. When you do that comparison, it's only one quarter that has to be off, not 2 quarters, 3 quarters, or the entire year. If the second quarter or the third quarter was the only time you were down, you can still qualify for the second round of PPP. Okay, this is a worksheet that I'm going to provide to you. At the end of the seminar, it'll come to you via email. Very, very simple comparison. We just used a company called Acme. We took their deposits that were going into their business bank account for 2019 and for 2020, and it does the calculations for you. It says, hey, do they qualify? This company, with the sample data that we put in it, they did qualify. They were 25% lower in the first quarter. That means they get through the door. They could apply just with that. The second quarter was down, but only down 24%. They didn't cut us any slack and say, hey, at 24.9, you get to round up. There's no guidance on that. It says 25 like it's a bright line test. They may change that going forward, but right now, if you're not 25% or above, I don't think they're going to process your application. Their third quarter, they were down 26%. And look at their fourth quarter, they were actually up 5%. But because they had at least one quarter that was down 25% or more, they definitely get to qualify. Again, not necessarily required by the bank that you will use. It's something that we created on our own, but we think it's very telling and very easy to illustrate what's going on and which quarters were down. Okay. Restaurants, there's some other legislation. Not only do they get the 100% deduction, but in this second round, the amount that a restaurant qualifies for is a little bit different. Everybody in the first round was 2.5 times their average monthly payroll. Okay. Restaurants or any companies that run into NAICS Code 72 get 3.5 times their average monthly payroll, up to a maximum of $2 million. First round, if you remember, the maximum was $10 million. So again, targeting smaller businesses than the first round, targeting additional assistance for certain industries, mainly those in the food service and accommodations and hotel industries. And we'll see that in just a minute on another slide. This would be that slide. The NAICS code stands for the North American Industry Classification System. All right. And if you type into Google North American Industry Classification System, or NAICS, you will get to one of the websites where you can type in the type of business you have, and it'll tell you what your NAICS code is. All the ones that fall under, that begin with 72, are essentially listed here. Accommodations and food service, traveler accommodation, hotel, motel, room boarding houses, dormitories, worker camps, caterers, mobile food services, cafeterias, bars and grills. They're all in here. So bars, restaurants, hotels will qualify for a little bit more. Another change is that 501c6 organizations, these are business leagues like your Chamber of Commerce, your real estate boards, things like that. They had employees, and they were certainly impacted as business went down and people weren't paying in their dues. And some of these organizations are quite large, employing hundreds and hundreds of people. Congress decided to let them in. And so these people, which are really business related organizations, although they're not, quote, for profit, can qualify for some relief for payroll. Okay. Next couple slides, I'm just doing the side-by-side comparison of what was going on in round one, what's going on in round two, and then we'll talk about what you need to be aware of. Okay. The deadlines, the disbursement dates, the way the loans came out, those will be similar. We're just later on in the year, and so we have different deadlines and things. The deadline for round two of PPP is going to be March 31st of 2021. There's no provision in there to extend it. Don't know that they will. I don't really know that they won't. I would just tell you to get your application in, make sure you're lined up, and if you qualify, hopefully they do not run out of funds, and everything will be processed on or before the end date. Round one, little confusing. They started out and said, hey, this is 8 weeks worth of payroll. This is the way you're going to calculate it. Then they came back and said, no, we'll extend it up to 24 weeks, giving people more time to spend the money. In doing that, just about everybody would qualify for forgiveness also. In round two, they're just really going with the 24 weeks or until you spend it out. So again, the funding of it's based upon 8 weeks worth of payroll. They're giving you 24 weeks to spend it. So even in a downturn, most people will use it up and use it all up on payroll. Okay. In round one, they defined covered payroll as what you pay your employees, their hourly wage or their salary, group health insurance that was paid for by the company, employer funded retirement plans, or at least the matching part of the contribution, the amount the company paid for, and then state unemployment taxes that were directly related to those wages that were paid for by the company. So everything, again, paid for by the company. In round two, they expanded a little bit. Again, it's all paid for by the company. It's that group health insurance. Now they added in life insurance, paid for by the company, disability paid by the company, vision paid for by the company, and dental. This isn't what you withhold from your employees' wages. These are amount the company's paying for the employee, as a fringe benefit. Okay. Um, this may be, in certain cases, an additional benefit for people on round one. If they were very close to forgiveness, they're going to allow them to go in and count some of those expanded definitions of expenses, life, disability, vision, and health, and see if that helps them get to full forgiveness. So if you're one of those companies that was running borderline on full forgiveness, you may want to get back with your CPA and say, hey, under the new law, can't we throw in some additional types of expenses? Okay. In round one, when we got to the expenses that were not payroll, so everything that was related to payroll started out, you had to spend 75% of your money on payroll. Then they lowered it to 60%. It's still at 60% for round two. That other 40% now in round one could go to covered mortgage interest, basically mortgage on your office building or your factory, rent on the office building, the factory, and utilities. Very, very narrow. They expanded it for round two. Okay. It's still mortgage interest, rent, and utilities. Other covered operational expenditures, we'll do a separate slide on that because there's quite a few of them. Property damage cost, and they specifically manage due to riots and other disturbances. Supplier cost, okay, which to me are operational costs, but they're really talking about like cost of goods sold here. And then they specifically mention worker protection expenditures. Okay, so that would be your PPE, your masks, gowns, plastic shields, all those things that went up. They have an expanded definition of that too, that even go as far as including, converting the side of a building to handle a drive-through could qualify. So a lot more expenses in this round two availability of expenditures than there were in round one. Okay. In round one, when you annualize payroll for anybody, nobody could have more than $100,000. That stands true. So there is still a cap on the amount that you can pay any given one person. Group health insurance stays the same, but again, here you'll see they expanded some of the other insurances as long as they're paid for by the company: life, disability, vision, and health. And that may apply back to round one and round two if you have not applied for forgiveness already. If you've already applied for forgiveness already on round one and received 100% forgiveness, you don't have to worry about it. You're done. Okay. If you haven't applied yet, it's probably time to don't apply just yet. We got plenty of time. Let's get your application completed for round two. And you might be completing your application for forgiveness on round one and round two at the same time. That might be a more efficient way to present it. Okay. Round one, you were limited to 2.5 times average monthly payroll. In round two, for most businesses, it's exactly that way, except unless you're one of those qualifying businesses with that NAICS Code 72, the restaurant, the hotel, the bar or grill. Okay. And loan cap, we've already mentioned in round two, is $2 million. It was $10 million in round one. Okay. All right. We have to remember some of the internal rules with it. Remember, only 40% of the money can be spent on non-payroll items. It was a governing principle in round one, still a governing principle in round two, and we can look to those expanded definitions to see if they assist us for the other qualifying expenses. Okay, told you that we'd have a slide that went into some of those other categories. So covered operational expenditures, okay? They can include business software or cloud computing services that facilitate the business's operation. Okay. This was not in round one. Okay. So basically, if you had to move to the cloud or make some IT changes because all your people were working from home, those expenses can be brought into the pile. Human resources can be brought into the pile. So, yeah, some of your human resources cost, especially as they related to maybe that now mobile or telecommuting workforce. Okay. Sales and billing functions, and then accounting or tracking of supplies, inventory, records, and expenses. So I'm waiting for additional guidance to see if the bills that I send clients qualify for inclusion. I hope that they do, because then everybody will smile when they pay me. All right, covered property damage. They said that they would cover some of these expenses, then they could come into that 40% part of PPP. Property damage and vandalism, looting due to public disturbance that occurred during 2020 that was not covered by insurance or other compensation. So if it was insured loss, you don't include it. The insurance company was already paying for it. But many of those businesses had uninsured losses or losses that exceeded their insurance during some of the looting and riots, and that's what they're specifically targeting there. Okay, and then covered supplier cost. Okay, this one is very broad, and I've got some guidance on this one so that people don't get confused here. To a supplier of goods pursuant to a contract, okay, order and purchase order that is in effect before the dates of disbursement of covered loans for the supply of goods. Okay, must be goods essential to the operation of the entity at the time at which the expenditure was made, and then my reminder. Some of those contracts are oral, okay? But I think if the bank's asking you to document it, or the SBA could be asking you to document it, you want to go ahead and get a letter, a written contract, or an email saying what's going on. So let's look at a restaurant, okay? A restaurant has perishable items, meat, cheese, vegetables, those type of things that are coming in that they then prepare and sell, okay? Those goods are certainly essential to the operations of that restaurant. They're looking for contracts or orders that were in effect before the date of disbursement of the loan. Okay. I don't know that restaurants have with their produce supplier a written contract that lays out all the terms. Typically, they're on-demand oral contracts that say, hey, on demand at market price, I will provide these things to you, or at least that's the oral agreement. It may be good to go ahead and get that boiled down with a produce supplier to an email that says, hey, we are on-demand contract for you at market price. We have an existing relationship. We've worked with you for the last 3 years. We're happy to see that you're coming back into business, and we will continue along the same terms that we have. Those type of things are then documented and could be provided, and I think help your covered supplier costs become part of PPP if it's necessary. And the last part, I think people kind of understand, the covered worker protection expenditures. Okay, required to adapt the facility or the worker to the new environment. And if you want to see if something is deductible, if it was required by Health and Hospital, the Center for Disease Control, or for OSHA, it's written into the law. Those things essentially automatically qualify.
Excuse me, Bryon.
Yes.
We just had a chat come through where they said the presentation is frozen and the sound is gone.
Ooh, okay. I can hear you.
It's
Let's
back.
see if we can do.
It's
Okay, it's back. Okay.
Thank you.
Maybe weather related. So sorry about that. If there's a question or part that you missed, you will get the slides, and it is being recorded, so you'll be able to go back through and hopefully pick up on anything that was missed. And if not, just contact the center or me, and we'll try to fill in the gap. Okay, and then those covered worker protection expenses include the cost of sanitation, social distancing, and those type of things for worker or customer safety. So again, just an expanded area where part of that, or where 40% of that money could be spent if it's not already spent on payroll. Okay. This one was, this slide goes into some more detail on what's considered part of those worker protection things. And I wanted to show this specifically because it may include the cost of installing that drive-through window facility. That would normally be a capital expenditure, but in this case, they're saying that that renovation of asset would qualify for PPP money. As you say, indoor and outdoor combined air or pressure ventilation systems, again, typically a capital asset, not a regular periodic expenditure. physical barriers such as sneeze guards, indoor and outdoor, yeah, commercial real estate, on-site or off-site health screening capabilities. So very, very wide here, and not one of the things that was originally contemplated in the first round of PPP. Okay. Getting into some of the things and applying for forgiveness. This isn't really the forgiveness seminar. We broke this out because I think it's probably more important right now that people apply for their second round of PPP than worry about the first round of forgiveness or even the second round of forgiveness, because you have 10 months from the end of your covered period to do that. So most people will have well into July or August, maybe even September of next year before they have to turn in their application for forgiveness. But in talking about it, do you have to wait to the end of the 24 weeks on your round two before you can apply? And the answer is no. And so for a number of my clients, I know we're going to complete their round one forgiveness and their round two forgiveness, yeah, probably about 10 weeks after they get the money. We'll be doing them at the same time. We just think it's going to be more efficient and it's allowable. So don't I would not stay up at night worrying about forgiveness right now. I would put my time and effort into running my business and getting my business back. Okay. Okay. But even though this isn't the forgiveness presentation, I'm sure we'll do some of those in some of the days coming. I do need to touch on it a little bit and just remind everybody, in order to be forgiven, you have to ask for it. The bank's not going to automatically forgive you. The SBA is not going to automatically forgive you. There was talk this summer, that PPP loans under $50,000 would be, automatically forgiven and no actions would be required. That turned out to be more fake news. Okay, nothing in this new legislation contemplates the fact that anybody will be automatically forgiven. In fact, the opposite is true. They've basically legislated now and said in order to be forgiven, you will file an application. So you will file the forgiveness application if you want to be forgiven. Otherwise, under the provisions of the law, the PPP funds will turn into a loan that will be repaid over 5 years. So if you don't want to repay at all, you're going to file your application for forgiveness. Okay, I give you some dates there too, just kind of showing that 24-week period plus the time. There are people who got their loans early on that will not have to file until July in order to receive forgiveness. Okay. You'll notice at the top of the slide, and we use the IFR that stands for interim final rule. The interim final rule is the guidance that was published by the SBA on January 6th. This is the current guidance that we're operating under. I would expect more guidance to come out in certain areas as they kind of clarify even more what some of their meanings are. But for right now, this guidance is much more clear than almost anything we received in the first round of PPP. I think they learned a lot. They were already contemplating these things happening before the law came into being. So they said, when this second round passes, we'll be prepared for it. I think they were much more prepared for it. So as far as legislation goes, this second round of legislation was just so much cleaner, tighter, and professional than the first round. The first round was, I know it was chaos when they made it, and it looked like it when it came out because it confused everybody. Okay. But in this interim final rule, we see that there are some additional rules that can affect us. Typically, most people making application for their second round of PPP will use their 2019 numbers, just like they did for their first round. There is guidance here that says, hey, if it's beneficial to you, we'll allow you to use the preceding 12 months, not necessarily a calendar year, which means that somebody might include January of 2021 in their calculations and go 12 months back to December or to February of 2020. Kind of counting those 12 months, it would be more beneficial to them than just looking at 2019. Most businesses were down, at that time. So there's probably just a handful that the calculations would be beneficial to. And the ones that probably would be looking at it are the ones that had dramatic increases in labor expense due to the virus. You know, they were having to wash things down every single day. They had to hire extra labor. They had to hire, buy extra chemicals and do things like that. And their financial statements show the impact of that additional labor and those additional expenses. Those are the ones that I think that this will apply to. Okay. All right. The interim final rules, which essentially are the law that governs us, does say that the last day to apply is going to be March 31st of 2021. Okay. Um, in order to apply for the second round of PPP, you have to have already applied for the first round of PPP and have used or be able to show that you will use up all those funds before they'll approve your second round. So that's so they don't pile on each other. If you'd applied for PPP round one and you still haven't spent the money and you don't know how you're going to spend it in the qualifying areas, then you're not going to be able to make a second draw. Okay. And this interim final rule and new rules will change. It's not a maybe, it's a given. There will be new guidance that comes out. It's all going to be on treasury.gov. If you go to the treasury.gov website and click on the pandemic relief or COVID-19 response, you'll see the latest and greatest as it comes out. And they've revamped that website since the beginning of the year, kind of breaking down the categories into what was first round, what was second round, and what rules do you need to be looking out for. Okay. Getting into the IFR, we've touched on these things, but in the interim final rule, these slides are telling you, hey, it's specifically in the law. Okay, so it's not just on my slide, but it's specifically in the law. 300 or fewer employees experienced a revenue reduction of 25% or more in 2020 as it's relative to 2019. You did receive your first draw PPP loan, and you have or will use all of that money. Okay. Um, you know, as of application date, will you have to have spent every single dollar in your first draw of PPP? No, but you're going to have to be able to demonstrate that it will be spent. Okay, very fine line there. It certainly is easier if you applied early and all your PPP money was spent out by August, and now you're applying now. Much easier to prove than if you're still holding on to a few dollars. Okay. The same basic rules apply for first round as the second round. It is a loan as it originates. If you do everything the correct way, it will be turned into a grant. But even as a loan, no collateral is required, no personal guarantees are made on the principal amount of the loans at the time that it's issued. Okay, the interest rate will be low. They give you the basis here, but it's essentially a 5% interest rate. Okay, and the maturity is 5 years. Okay, that's on that's the repayment time. Okay, the 25% revenue drop and the definitions of revenue. Okay, I've seen some people get caught up in this one. Basically, we want to look at whatever you call revenue for your tax return. Okay, this is the SBA, that is the government, it's part of the Treasury Department, so is the IRS. So the tax return really speaks to them. You'll be filing your PPP loan on the same basis that you file your tax return on. So if you count it as revenue on your tax return, you will count it as revenue in your PPP calculations. Again, the easiest way to define it. There are things that they define for revenue, and we'll see some slides on that. And basically they say, just like the IRS does, everything is revenue unless we exclude it. And then they give you the list of exclusions. Okay. All right. If you choose to file based upon a decline overall for a 12-month period, I looked at all of 2020 and I looked at all of 2019, and my 2020 is 25% or more below 2019. You're going to be required to provide your tax returns, both your 2019 tax return and your 2020. If you file based upon one quarter and you say my third quarter of 2020 is more than 25% lower than my third quarter of 2019, you just have to provide financial statements or deposit records. So we're in January right now. I haven't completed really the first tax return yet. We probably will maybe over this weekend, waiting on software. The IRS hasn't opened up electronic filing yet. So the idea of having a 2020 tax return right now, completed right now, is a little bit foreign to us. But On a quarterly basis, we're doing financial statements for some clients every single month. We have that information in our records. The bank is used to seeing that information. The SBA is used to seeing that information. So if your books are up to date, it should be relatively easy to get there. If your books are not up to date, you've got to get busy, because this application needs to be completed again before March 31st, and hopefully way before then, to make sure you don't run out of money and you're properly in line for funding. Okay. Um, Again, just some of the things we talked about. Which 12-month period would you use? It gives you some flexibility here. Don't know how much it affects everybody, and the thought of your payroll expense actually being higher in 2020 than it was in 2019, I think is going to be limited to a very few companies. If you've got some questions on that, let me know. We'll get you some answers. But I think for the overall population, it's just not going to impact them. Okay. Gross revenue, and what do they mean by that? Okay. Again, that definition that tends to come from the government. All revenue in whatever form received or accrued in accordance with an entity's accounting method, from whatever sources, including from sales of products, services, interest, dividends, rents, royalties, fees, and commissions. Okay, reduced by returns and allowances. This is the technical definition of it. It would look like an IRS definition of it. In our case, you exclude net capital gains and losses, as these terms are defined and reported on the IRS income tax form. So, basically, they're looking at revenue generated from operations, not from the sale of business assets. So if they're looking at your total sales to customers, not if you sold off a truck because business went down and you didn't need it anymore. You'd be able to exclude the truck, but the sales to customers would be included. Okay. And then, as they say, it includes everything except taxes collected and remitted to a taxing authority. So you don't count the sales tax collected into your total gross receipts. So for a restaurant or bar, something like that, it's not just straight deposits, because when they make their deposits at the end of the day or the end of the week, they have sales tax in them. So we have to back the sales tax out. So there are adjustments that get made for certain things. This slide speaks to what those are. If you're a business, and they specifically mention travel agent here, you're collecting fees for other people, then you're kind of the pass-through. You collect the money from the client, and then you pay it out to the hotel, you pay it out to the cruise ship. That's not really your revenue. That's the hotel's revenue, and that's the cruise ship's revenue. You're just handling it for them. So you include your commission or your fee that you charge to the client to handle that, not the amounts that you're collecting or remitting to somebody else. Okay. The definition that they put here for gross receipts when they start talking about subcontractors, I think, is awkward. So again, I just point you toward your tax return. And if you look at the line items on your tax return, I don't think anybody will get confused. Okay. Another part of the Consolidated Appropriations Acts. If you remember back in round one of PPP, there was the PPP loan and the Economic Injury Disaster Loan, EIDL. And the EIDL loan had an advance available to it. It was up to $1,000 per employee, up to 10 employees, so $10,000. The EIDL loan and the PPP were supposed to be coordinated together and offset. So if you qualified for a total of $60,000 worth of PPP, but received a $10,000 advance, when they awarded your PPP, they were only supposed to give you $50,000 because they had already given you 10. Again, it was hectic at that time. Things didn't coordinate well, and there were some people worried that they got some of that EIDL money, thinking that EIDL advance money, thinking it would be forgiven, and now it wouldn't because they got it. Congress just cleared the decks and said, hey, if you got the EIDL advance up to $10,000, it's forgiven. The expenses you paid with it are includable. They basically said, don't worry about it. Okay. Got to tell you, from round one to round two, the rules changed. All during round one, the rules changed. I think there'll be rules changing. So we're kind of chasing the target here. The SBDC, the center, will stay on top of the law. Y'all should be aware, the SBD centers that are throughout the state of Louisiana are all funded under grants by the SBA. So this is one of their branches, if you wanted to put that. So the people at the Small Business Development Centers kind of have the hotline to the SBA. They're in regular communications with them. They get advance notice of some of the things coming down, and so they are a tremendous resource. And they're free to small business. So if you run into a very serious question, they are a fantastic place to contact and get an answer. Okay. Apart from that, your accountant, your attorney, your banker are also great resources. Okay. I spent the early part of this year, as tax season kind of got put on hold, working with clients such as yourself, helping them through the PPP and EIDL process. And right now we're doing the exact same thing. We had started on forgiveness, but we've kind of tabled that for a little while until everybody gets through their round 2 applications. Okay. It is a government program. Just remember, there's always another form to fill out. So keep calm and fill out the next form. Okay. Again, for references, everything at treasury.gov is going straight to the horse's mouth. Okay. You can look at the interim final rules that have been issued, and you can look at the anything that was issued or any of the guidance or FAQs that are there. SBA.gov, smallbusinessadministration.gov, they republish some of the same things that are on the Treasury's website, and they'll have some other guidance issued. I mean, it's all consistent, but there is guidance there. The AICPA.org website, that's the American Institute of Certified Public Accountants, has a couple pages in there specifically related to the COVID-19 virus and the relief provisions that have been passed. There are tables, there are charts, there are worksheets. Some of them are very helpful. My own website, GarretyCPA.com. We've got a page dedicated to the COVID-19 virus and the assistance that is out there. And then I've already mentioned and sung the praises of the Small Business Development Centers, especially that one at Southeastern, who was our host today. So please don't feel like you're lost. The answers are out there. They are obtainable, and there are plenty of people out there wanting to help you. Now we're going to open it up to some questions, and I'm sure we're going to have a few.
Okay, thank you, Bryon. If you did not apply the first time, can you apply for round 2?
Okay, no, but you can, if you qualify, apply for round 1. Okay, so that was one of the provisions. There's still that $130 billion that's still in the bank from round 1. So you've got to go apply for round 1. You got to follow some of the provisions that are for round 1. And some of the banks are a little more limited on which ones are taking round 1 applications versus round 2 applications. But I'm sure between the center and some of the other resources that are available, you'll find a lender that'll handle it. But again, you're going to have to show your 2019 numbers and show what your payroll was or what your sole proprietorship profit was. And if you've got those things, you can make application for round 1. Now, after you can show you can spend the money in round 1, then you can jump to round 2.
You said prior 12 months of payroll. Can you use calendar 2021 if it has more payroll than 2019?
Yeah, we're laying out that example there. There are very few companies that I think are going to have that, but you can. It is allowable to use your 2020 payroll in lieu of your 2019 payroll if it's higher. And that's the only reason you would do it is if it's higher. If 2019 is higher, I think you're going to use 2019.
What about nonprofit revenue? Are grants included restricted versus straight donations unrestricted?
Okay, for a nonprofit application, you're going to have to file what you show on your 990. That is your tax return for a nonprofit. Okay, and you're going to follow your regular revenue recognition. Okay. So some grants are funded up front and they're intended to be revenue over the next couple of years, which means, hey, I might get $100,000 today, but it's really $33,000 a year for the next 3 years. That's your revenue recognition model on that grant. So you're going to follow what you historically do.
Clients that received in excess of $2 million in round 1 are being rejected for round 2 because their round 1 application is under review. As is all PP round 1 loans in excess of $2 million. What can we do?
Contact your congressman. Okay. This is one of those areas that the SBA is aware of, the Congress is aware of, and it's really going to be you ringing the phone at your congressman's office and say, hey, we will qualify, but there is a block here. We need some help to get this through. I think it's one of those things the SBA intends to address, in the next couple of weeks. So I think you'll still make it in, but yeah, your congressman is the one that will be able to push that forward.
I own a daycare. My payroll went up to be compliant with COVID and the revenue went down. Before COVID, it was 1 teacher to 12 kids. And after COVID, it went from 1 teacher per 5 kids. No
Okay.
groups over 6 people, including the teacher.
Okay.
Not
So your
sure what the
payroll may have
question
gone
is.
up. You may want to be using your 2020 figures instead of your 2019 figures.
Are there any different rules or exceptions for churches making second round application?
Churches follow the exact same rules they did on the first round. The only real businesses that are affected differently than in first round are any of those with the NAICS Code 72, the restaurants, bars, and motels.
Would sales tax returns along with financial statements support gross receipts instead of tax returns?
Okay, so I think your sales tax returns is going to be a better telling of what your gross receipts are. Okay, because when you report your sales tax, when you report your gross receipts on your sales tax, you're just reporting your customer sales. You don't have any sales tax collected or any other numbers in it. So I would use your sales tax returns.
If I got my PPP round 1 in June, I need to apply for forgiveness when?
Okay, 24 weeks out plus 10 months. So I think you're gonna end up in September before you have to file your application. So you've got some time.
If I had 3 daycare facilities when I filed for round 1, but now have 5, my revenue for the 3 I previously owned is down by 25%. But overall, because I have 5 facilities, my total revenues are up. Can I qualify?
Good question. I think we're going to have to look into look a little bit deeper into the guidance to say, hey, can I compare apples to apples, my 3 to my 3? I see exactly what you're trying to do, but I don't have anything on point that says yes or no right now. If you want to follow up with an email to me, I'll see if I can get you some guidance on that.
Can I apply for round 2 before I apply for forgiveness for round 1?
Absolutely, and probably should. Anybody who's been working on forgiveness for round 1 right now probably ought to just table it. Make sure you get your application in for round 2, and then you can go back to your forgiveness application.
Can we use 4th quarter comparison or the PPP for the PPP?
Yeah, you can use fourth quarter 2019 to fourth quarter 2020. That's all you have to do is show 1 quarter.
We are to file our 2020 taxes and use the 2020 annual revenue for round 2 application, not the annual revenue that was reported for round 1. Also on the application for average monthly payroll, are we to use payroll amount we reported for round 1?
Okay, so let's make sure we're talking about 2 different things. The qualifications to show the drop in 25% of gross receipts. Okay, that can be quarter to quarter, or that can be year to year, or 12-month period to 12-month period. Okay, so they give you some options there. Whichever one gives you the 25% drop or more is what you're going to use, and go with the simplest one. If one of the quarters down, just go with the quarter, because that just gets you through that one. The next one is the qualifying amount for PPP, which is based upon payroll. Okay, again, you've got options there in round 2 that you didn't have in round 1. You can use your 2019 numbers. Most people, I think, will, just because they used them for round 1. It's going to be the exact same amount, and it's just like, transfer the numbers over to the new form, sign it, and send it in. The bank's already seen them, the SBA's already seen them, so you've been vetted on that. The ones that won't is where payroll has increased in 2020 over what total payroll was in 2019, and they need additional payroll dollars over the next 8 weeks to help fund their business. Those are a little bit more difficult, but you will have to show your payroll and your quarterly reports for all of 2020, in order to justify that payroll.
Someone's asking for the contact number at the SBDC, and that is 985-549-3831, and you can ask to speak to any business consultant.
Okay. Yeah, and I think that's also on the first slide that we had, so you'll get that at the end of the presentation.
My bank is demanding documentation, but my PPP2 application is less than $150,000. I don't want to provide documentation now.
Okay, well, then you can't apply now. The bank and the SBA made the rules. You've got to have the documentation. So you've got to get them the amount that satisfies them and allows them to justify the loan.
Okay, I'll give you guys another minute. If there's any final questions, please type it into the Q&A box.
Okay. The slide that I have up right now gives you a phone number if you need to contact me, and an email. It's sgarrety@garretycpa.com. So that one has been set up specifically for SBA questions. If you have one, I may not answer all of them individually. I've got different people on staff and other attorneys and people in the community that we've been working with. So I will forward it to somebody that can if I don't have the answer available to you.
Okay, and the final question, can nonprofits apply for round 1 now, or do we apply for round 2?
Okay. Anybody who has not had a round 1 application needs to make their round 1 application now. Okay. 284 no, 130 million, $130 billion left in that bucket of funds. It wasn't all used up. Go to the SBA website, use the correct form for round 1 application as opposed to round 2. But you go there first and check with your bank and say, I'm making a round 1 application. I think on that one, it's going to be very important to make sure the lines of communication are staying open as to which one you're applying for. The banks are going to see far more round 2 applications than they are round 1 applications. So they're probably going to have a special portal, special basket, or special handling on the round 1.
Okay, do you have a time to take another question?
Sure.
When they state receipts, do they mean revenues deposited or gross profits? Because our gross profit had cost of goods sold deducted.
Okay, they really mean gross receipts. Okay, so they are looking for gross sales, gross receipts, not gross profits or margin. So, again, if you follow your tax return and you look at really line 1 of your tax return, if it's an 1120, 1065, something like that, those are your gross receipts. Less any returns and allowances is those are the numbers that they're honed in on.
Are documents supposed to be submitted online only?
Okay. It depends upon the bank. Okay, so a lot of the banks have adopted similar platforms now. They're using what they call the Sage platform, and you can jump from bank to bank, and it's almost identical. Okay, other banks, because we're dealing with some community banks, don't have the the really enhanced technology for the online portals, and some of them are just email it to me. So it doesn't really matter. You just have to do what the bank asks for.
Okay, and the final question, what is the SBA form for round 1?
It's the same form number. We just look at the dates. Okay. If you go to the SBA website, or what I'll do is I'll get the round 1 form and the round 2 form, and I'll get it to Karen so she can distribute it also in the email.
Okay, there are no further questions. So I want to thank everyone for attending today. It was our pleasure. And I also want to thank Bryon Garrety for always sharing his knowledge with everyone and keeping you guys up to date on what's happening. I will be sending out a feedback survey to you along with the PowerPoint and the recording. And I have to say the recording, I'm not sure if it finished recording. It looks like it might have stopped midstream. We could have ran out of memory, but I will see what it did and send that to you as well. And any other form that Bryon just mentioned, I'll attach those as well. So thanks, and I hope everyone has a great day. Bryon, do you want to say anything else?
I hope everybody does have a great day and a great weekend.
Thank you.